So, okay, first layer, foundation layer, CPF Life. Okay, CPF is a very complex mystery black hole. Not black hole. It's it's so confusing that sometimes there are people come to me. I also have to Google to find out the so-called the structure of CPF Life. Okay. Yeah. So thanks for responding. I need some response. Honestly, I'm talking inside my study room that nobody respond to me. Right? Okay. So CPF Life. Okay. I just want you to have simple concept understanding of CPF Life. Okay. Any specific question you can ask me personally. Okay. I don't want to touch on all those unique questions that you have for CPF. Okay. Because this is a foundation layer. Okay. It will be definitely good to start with this foundation layer. Okay. It's definitely good to start with, and I agree CPF is complex, but still a good instrument for your retirement. Okay, I definitely agree with that. Okay, so a lot of people don't know, right? When you reach age 55, there will be a new account created called retirement account. Okay, so what happens is when reach age 55, right, the OA and the SA, okay, will go to RA. They will transfer a lump sum to RA. Okay, and that amount based on today, 2021, you must transfer 186,000 to this RA account. Okay, so this amount you can only withdraw if your OA and SA is more than 186,000, then only you can withdraw at 55 years old. Okay, if your OA and SA is lower than 186, you cannot withdraw anything. Okay, by right you can withdraw 5,000. Okay, yeah. So this amount will be locked in RA, right? In RA, and you can only take out at CPF Life, right? From age 65. Okay, so that is the general way of how CPF paid back to you. Okay, there is always rumor. Hey, CPF is not your money. You will never take back any single cent. Not true. Not true. CPF money is still your money. You will get back something, but only from 65. You will get back on monthly basis, right? As long as you live, right? From this 186,000, right? So this 186 only can take out after 65. Okay, at 55, you can take out only if you're above 186,000. Okay, I think most of people know this. It's just that they don't really have a full idea on this. Okay, so there is the problem here. The problem here is you only can take out most of money from 65. Okay, what about before 65? Right, before 65, how are you going to survive without CPF? Right, that's why CPF Life is the foundation. We cannot just rely on CPF Life for our retirement. Okay, that will give you basic need, but not your additional whatever you want. Okay, oops. I think I pressed wrong button. Oh, okay, never mind. Move on. All right. So, okay, this will show you that the snapshot that most people they don't even have sufficient amount of 186,000. Most people have less than 186,000 in RA account because most of the CPF money they use to buy property. Okay, and property unless they sell or reduce or downgrade, if not most of the time they don't even have a minimum sum in the retirement account. Okay, so and of course foundation layer, CPF Life is an annuity plan. Okay, annuity plan meaning pay as long as you live. Okay, pay for life. That is called annuity plan. Okay, a pure annuity plan will pay you as long as you live. That's why CPF Life is an annuity plan. Okay, you use your 186K in your RA account to join CPF Life, and you will receive cash payout as long as you live from age 65. Okay. Unfortunately, if unfortunate event that you pass on early, you leave some bequest, okay, meaning payout to your beneficiary. Okay. Like I mentioned, whatever return they show to you is only based on estimated interest of 3.45 and 4.25% return. Okay, not guaranteed number. Okay, I want to tell you that CPF Life is not a guaranteed number. Okay, of course, the return is not exactly same as this. Okay, because it's also depending on when you take out the money. Right, it's a bit complex to explain this, but I have I written an article on this. Okay, I actually calculated what is your return. Okay, let me move on first. Okay, I'll show you this. There are three plans: standard plan, escalating plan, and basic plan. Okay, usually you go for standard plan because you receive more payout for yourself, less payout for bequest. Okay, that is called default plan. Okay, if you don't know which one to choose, I can tell you go for standard plan because you need more money for retirement. Unless you are very rich, you don't need this money, then you go for a basic plan. This one will give you higher return. Okay, conceptually, basic plan give you highest return. But remember, I said earlier, retirement planning is not about getting the highest return. You want to get the highest cash flow. That's why standard plan make more sense for retirement. Okay, basic plan is like, you know, you want to pass on a lot of money to your beneficiary, your son or children, then you go for basic. Okay, escalating is for those, you know, they don't know how to manage their money, they want to get higher and higher payout, okay, to factor inflation, then you go for escalating plan. Okay, usually most people choose either standard or basic plan. Okay, okay, I try to show this return. Okay, you don't have to download this, you can just Google. Let me see how to do this. How to change to a pointer. How come I cannot click this one? Okay, then I click for my other screen. Cannot click. Okay, I try to show the page where I calculated the return for CPF Life. Okay. Yeah, actually return this article on the, okay, we will probably update to 2021 version. Okay, but number is only slightly different. So what you can do is okay, you can go to here. Okay, actually I say what CPF Life work here, but what I want to show is I use the CPF Life estimator to calculate return. Okay, so you can see that this will be the return that you can get if you go for standard plan, right? This will be the actual return belongs to you. Okay, and because CPF Life pay out as long as you live, so the return is really depending on how long you live as well. Okay, so I have two calculations here. Okay, one is not including bequest, meaning, you know, you don't care whether your bequest whether will pay to who, right? So you can see that actually your return, it can be negative. Okay, why negative? Very simple, because you put 186,000 into the RA, and if really happen that the person live until 70 years old, then the person only receive 5 years of payout from 65 to 70. Okay, and that 5 years payout is actually lower than the amount you put in. That's why return is negative. Okay, yeah, because this is so-called not including bequest. Okay, whatever payout to your children you don't want to include in calculation. Okay, so that's why it can be end up you have negative return. Okay, so this is for male, and the other table is for female. All right, the other table is for female. Okay, so you can just maybe I just type this link into the chat box. Okay, you can go and read. Okay, I just calculate all the return for you. Okay, yeah. So anyway, it's still a good scheme that you should have as a form of foundation for retirement. And how much you can take out based on projection of standard plan, right? You can actually get about 2,000 to 2,001. Okay, payout if you set aside the minimum sum. Sorry, not this one. If you set aside minimum sum of 181,000, right, you get 1,003 to 1,004. Okay, so that should be the basic foundation, about 1,003 to 1,004. Okay, 1,390 or 1,490. Right, that is the first thing you will have. Okay, if you can set aside 181,000.